Hello traders, welcome to Investoo.com's introductory guide to stock indices. In this lesson, we are going to talk about how to swing trade stock indices on the short side. And this can be very profitable because when it comes to a short position on a stock index, when we have a sell-off, the sell-off is very hard and your targets are going to be hit rather rapidly. So if I zoom in on this price action right here, you can see that it was very profitable to short this top. Well, we're not looking to short tops or bottoms, right? But it was very profitable to try to short to these levels, all right? And we are talking about a nice 68 ticks or 69 ticks in profit. I'm sorry, 69 points in profit, which is exactly 276 ticks, which would made for a nice $3,450 in return on your investment if you're trading one lot. All right, but it looks very easy, all right, or it looks quite profitable. But if you're looking at it on a single bar basis, well, you can see that this is the first push down, okay? And let's start with the third candle. Just look at the third candle right here. I'm going to show you which candle I'm talking about. This candle right here, okay? Now, if you look at this candle right here, you can see that we went all the way to these lows on the 4-hour chart, but then buyers pushed price up almost to the entry point, which means that on this 4-hour candle, we had a huge range of about, I'm sorry, let me grab my tool again, my crosshair tool again, of about 12 points, which means that not many traders out there are going to like to be in the money for about 20 points and then, well, just see its profits getting evaporated by buyers pushing price up. Even though we continue lower to the target area, it's very hard to endure this. And not only that, we have a very choppy price action here. And then when we finally break with the price action or the choppy price action, okay, you can see it right here. You can see it on this bullish move. Then we have another big bullish move. And then when we are almost at the targets, we have another bullish move. Okay, and we are talking about retracement of about 20 points here. Even deeper of about 32 points here. And right here of about 21 points. Which means that if you are not used of swing trading any instruments, well, you should try to maybe just trade the weekly cycles on it, because it can be very, very difficult to hold a stock index trade for a very long time. Now let's go back again to the 4-hour chart, and let's look at how we can do this, okay? If we look at the daily chart, you can see that, well, these stock indices have something in common. They have periods of stagnation or periods of ranges, such as in these cases, right here, and then they have huge moves to the downside, okay? Now, after a long move up, you're always going to have a churn, a period of churning, and then you will have a move to the downside. How are you going to trade this? You're going to wait for that, well, you're going to wait for that range to become visible, and then you're going to put a sell stop, okay? We are talking about retracements here, okay? This is the first thing that you need to understand. We are talking about how to trade retracement on stock indices. Now, if we zoom in right here on this period that we were looking at, this one right here, you are going to put your sell stops just below the, well, just below the area of churn, and you're going to put your stops above it. Why? Because if we break below, such as in this case, you can see that this is the other reason it's very hard to trade them. You can see that we got filled on this daily candle, but then a very strong rejection appeared. This means that we got filled on sellers breaking below this area, okay, the area of churning, and then we closed all the way up here, forming a hammer or a pin bar, which means that this area was rejected. That can be very scary, and most traders would close manually the trade right here. But if you're using good money management techniques and you're only risking 1 to 2% of your account, it really doesn't matter. You're going to hold that trade. And what happens here? Well, that's easy. What we're going to do, we're going to extrapolate this area to get our targets. Okay, we're going to get a 1-to-1, and we're going to put our targets right here. What happens is that our targets got filled, and we made a nice 32 points profit. That's 128 ticks on the E-mini S&P 500, and let me tell you that 128 ticks on the E-mini S&P 500, it's very hard to get, which means that at $12.50 per tick on a one lot basis, we made $1,600 on that trade on 1, 2, 3, 4 days of holding that trade, which is nice. And you can see that the same happens every time we get a top. All right, the top is forming, and the tops are kind of difficult to look at because of the way the stock indices trade, always trading higher, and if they keep making higher highs and all-time highs, we are not going to have levels on the upside to know if that is in fact a top. But you can look at the square formation, such as in this case, and for example, here you're going to put your entry here, your stop right here. You are going to extrapolate this rectangle, and you're going to put your targets all the way here, which means that in this case you made a nice 20 points on the mini. And of course, you can always just close half of your position here and look for the next area of support, which in this case is this one. But you can see that sometimes those areas are not going to be taken or are not going to be tested, and buyers are just going to keep moving price up. This is basically how you can short on the medium to long term basis stock indices.